Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 19th of June, and as always, our guest on Monday is Vishnu Varathan, Head of Economics and Strategy from Mizuho Bank, coming to us out of Singapore. Now, Vishnu, it's always great to have you on the show.
Good afternoon. It's always a pleasure to be here, Brian. Thanks for having me on today.
Now, Vishnu, for a start, we've got to take a look at the numbers across the region first before we get your insights. We're going to start, however, with cryptocurrencies. Bitcoin is at 26,412. It's down 0.46%. Ethereum is at 1,722. It's down 0.38%. Now, looking across the regional equity markets, we start with the Straits Times Index, where you are at. It's down 0.61%. Bursa Malaysia in the KLCI is down 0.28%. Shanghai is down 0.63%. The ASX or Ordinaries bucks the trend. It's up 0.44%. The Nikkei is down 1.18%. The Hang Seng is down 1.38%. Rounding up the numbers, we've got the Kospi, which is down 0.91%. Vishnu, it's pretty much a sea of red with the exception of the ASX. Tell us why.
But it does look a bit counterintuitive because if we were looking at the US markets, they were up on Friday. Very strong showing for last week. So one would have thought that the momentum would have been derived from or inherited from the US, but this was almost all about China. And the thing to take note is, going into the end of last week, with the State Council meeting in China, the bets were piling up with whispers of, a huge stimulus from China. Already, the China Central Bank had cut two different policy rates, albeit just by 10 basis points. It was meant to be a signal of easing. But I think markets were disappointed that, whilst policymakers did say that they are going to come out with stimulus measures, there were no real details around those. So some of the rallies that had taken place earlier on in anticipation of a strong stimulus nevertheless got disappointed. So that's one aspect of it. There's also a forward-looking aspect. A lot of markets are closed in the West today for Juneteenth. And so what's happening is markets are looking ahead and saying, look, what do we need to watch out for? And in particular, we need to look out for 2 days of Federal Reserve Chairman Jerome Powell testifying to the House and the Senate. And it's very likely that during his testimonies, he will come off sounding hawkish by saying that the Fed has got a lot more work to do, justifying it and substantiating it. So markets are also taking a look at the risk-on rallies last week in the face of the Fed saying that they've got a couple more hikes, lifting up the so-called peak rate for the year. And that doesn't set the stage for a huge bull market either, not an unconditional one. So again, it's not just China's lack of stimulus, but it's also, or lack of details on China's stimulus, but also because US is perhaps going to come off sounding hawkish. And against that backdrop, I think there's a bit of caution. Those who really want to play it safe would much rather take profits early on and wait and watch for what comes out of this market.
Now, sticking to the China theme, basically major Wall Street banks have cut China's growth outlook. Now, essentially, that's validating what we've already been seeing in Asia in terms of slower numbers from just about everything. What are your thoughts again moving forward?
Well, I think the numbers is something that we did see coming off pretty soft. We've been flagging for a while that China's underlying growth momentum is really weak. And that really, that does marry up very well with the kind of contraction that we've seen in the global manufacturing goods demand. So all of these do add up. And that squares with the thought that whilst there may be hopes of exports weakness bottoming out, it's not going to turn around that quickly either. So China is really, it's really reflecting a wider story of global headwinds. And that's not even bringing in the US-China tensions, regardless of, Blinken's visit to China. It's not going to resolve anything structurally. The two things about that to take note, however, are first, under the right conditions, and this was the case last week, markets were quite happy to frame weak data as potential for a lot more stimulus. So they were happy to run with it. So that, I think, delivered disappointment on two counts. One is they didn't get any details of strong stimulus beyond broad motherhood statements. That's one aspect of it. And the other one is they're perhaps forced to reconsider whether any stimulus would have a lasting uplifting impact, especially against a backdrop of both a Fed and an ECB that don't seem to be done with the rate hikes yet. So the more rate hikes are done, the higher the chances of a hard landing, and hence more cause for China and Asia to worry about demand not holding up. The second aspect of weak data coming out of China is also going back to what's fundamentally holding back China, and some of these are very structural impediments to China's growth, including an already high level of leverage, needing to reapportion or at least redirect resources to the right industries, and all the challenges that come with it. So there's a sense that, save for some structural changes being made, the run-of-the-mill playbook of stimulus by rate cuts and just a little bit of public spending may not cut it. So these are the two aspects of slow growth in China that markets are being forced to reassess. Nevertheless, I think a lot of this is caution. There will still be some opportunistic risk taking, but we perhaps should be quite mindful that there are still bull traps out there, regardless of how hard equities rally.
Now, Vishnu, on that note, thank you very much for your insights. Thanks for coming on the show.
My pleasure. Thanks for having me, Brian.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy from Mizuho Bank, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out this interview on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks for tuning in.